Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you as we watch your grain and livestock market action, also your outside markets as well. Want to bring in Brian Hoops. He is the president of Midwest Market Solutions in Springfield, Missouri, and get his thoughts on what we're seeing developing in our grain and livestock trade. And let's go visit with him right now. Hey, Brian, how are you on a Tuesday?
Hey, good to talk with you, Marlon.
All right, appreciate it. Brian joining us by Skype here today to talk about the markets on the grain trade. Let's take a look at our futures. And on the corn market first, we had the corn market opening up basically flat. I believe, if I remember right, it was only one tick off of unchanged on the open. We kind of drifted a little lower. July corn down about 3 now at 372. In December down 3 1/4 at 389.5. So it's only one tick from our low of the day. Soybean trade, on the other hand, we have the July contract there down 4 1/4 at 952 1/4. And November now down 4 at 952 1/4. That's a penny from the low of the day there. Do you think there's any spillover pressure coming from the latest planting progress report from USDA yesterday?
Well, I do think that report that came out yesterday really showed the crop is an average crop. We're off to an average start. Emergence is average. There's really nothing wrong with the crop according to these stats from the USDA, and we're seeing a little turnaround Tuesday pullback as a result. You know, the meal has fallen below last week's lows. It has kind of dragged the soybeans and corn down along with it. I do think this gives us an opportunity for producers once again. We know this crop is really not as good as probably what the USDA is saying at this point, and there's potential for some problems down the road as a result of some of this late planted corn. So it gives us an opportunity now that the seed is in the ground to really see some big swings in the market. So if you're a producer who's maybe made some cash sales here recently, a pullback like today, or if we get a little bit further pullback on warmer weather into the weekend, that's going to give you, I think, a good buying opportunity to step in and re-own some of those sales.
I know in the recent flooding that we had in the, the mid-Mississippi Valley, let's call it, and a lot of Missouri where you're based there, that led to a backlog of cash grain trying to move from the terminals down the river because the barges were held at bay for a while. What's going on with the cash basis around that part of the country right now?
Well, you know, we're starting to see some cash movement now here, starting to break loose, especially in the Western Corn Belt and parts in that area in Illinois. We're going to see a little bit better movement, and that's going to weaken up some of this basis. So I think we're going to see a little bit weaker here on that respect. And going forward, you know, market's going to dictate based off of what weather conditions are going to be. We've said many times that you really can't kill the crop off until you have it in the ground. And now we've got the majority of the corn crop in the ground. We've got soybeans, at least half of the crop seeded. And so now we can either kill that crop and see some big price appreciation in June and into July. And hopefully we get some marketing opportunities.
Okay, let's look at the wheat. On Chicago July wheat right now, we're still seeing pressure, down 3 1/2 at 430 3/4. Kansas City on the July contract, we're down 4 3/4 now at 431 1/4. And Minneapolis spring wheat trade, we have July currently down 3 1/4 at 556. So pressure all around on the three wheat exchanges. Just real quickly here, Brian, do you think this wheat market can firm up here in the midst of harvest or not?
It's going to be tough. We're starting to hear some yield results out of Oklahoma and Texas, and those yields are a little bit disappointing, and that's what helped to rally the futures on Friday, Sunday night, and into Monday. We're starting to back off again here, and again, this could give us another opportunity to see another recovery. So we can't just continue to go straight up. We kind of peck at it, go higher, pull back, and then take another run back to the upside. It's a spring wheat that looks to be in pretty decent shape. Talking to our offices up in northern Minnesota and parts of North Dakota, the spring wheat crop's off to a good start. They've got good weather, much drier conditions with a little bit of rainfall, and things are off to a good start there, but it's the winter wheat crop that looks to have yields trimmed, and just until we get into harvest, we won't know how much.
Okay, I'll bring you back here in a moment, and we'll talk a little about our cattle and hog market activity as well. Our guest, Brian Hoops, will have more right after this. Well, we're back with you, and we are talking with Brian Hoops. He is with Midwest Market Solutions in Springfield, Missouri. In fact, he's the owner of it, and he joins us right now. I want to talk about the livestock trade here. Cold storage report numbers came out. They seem to be kind of a non-event yesterday, but I guess the cattle traders have to look forward to Friday, when that'll be another interesting scenario. We'll get the monthly cattle on feed report, but it comes out after the markets close up on Friday, and then there's no market action on Monday. So when those numbers come out, they're going to have to wait 4 days before they can do anything about it in the markets. How do you think traders are getting positioned before that cattle on feed report comes out?
I don't think a lot of these traders want to give up their long positions. You know, we had a little pullback earlier this morning and produced a pretty good buying opportunity. We've rallied quite a bit off of those lows this morning. Overall, the fundamentals appear to be pretty friendly, especially when you look at those cattle weights. They continue to decline. They seasonally start to increase in June, so it's something that the trade will be watching closely, but we're well below last year's weights. And this week we look to have smaller production, smaller numbers on the show list, and that all adds up to be friendly for the cash trade this week. So we may see some choppy action until Friday's report, but overall I think people want to be buying dips in this cattle market.
Okay, let's look at our prices right now on live cattle. Let's go to the big board where we have June down 40 at 123.52. August down 17 now at 121.85 per hundredweight, and we have the October back to unchanged at 118.40 per hundred. So they have firmed up off their earlier lows. We've come up now about $1.10 from the early lows, so pressure being relieved at the mid-session here. Looking at the feeder cattle trade, right now you have the August contract down 55 at 152.23, and you have September down 37 at 152.28 right now. Looking at this lean hog trade, well, we currently have the June contract 35 higher at 79.70. It touched $80 today. We have July now down a dime at 79.95. It got as high as 80.08, and then you have the deferreds just very slightly higher. July is just flirting with these contract highs here recently, but it made new highs this week, did not really blow through them, and it's just kind of like bumping its head. Real quick answer here, Brian, can they punch through it and make another leg higher, or are you worried we're going to go down from here now?
I think ahead of the Memorial holiday, we're going to have a tough time getting above it. I know a lot of traders have been looking at $80 as kind of a resistance point for this market. They're going to take some long positions off there. I expected the summer months are really going to struggle at $80. We could see a pullback going into Memorial Day, and then we could see another run after that. But I know the demand is expected to be very strong going into Memorial Day, and that's given us the strength here right up at this $80 level.
All right, good stuff. Thank you, Brian. Appreciate it. Thanks for the insight into the markets. Brian Hoops, he's with Midwest Market Solutions in Springfield, Missouri, and you can follow him on Twitter, too.
You know, we've got that holiday kind of dividing things up now. We'll have to see.
Yeah, it's going to be a bump in the road, and it can cause funny things in the market when you have an extended break like that.
This week and next week, watch out for funny things in the market, as Marlon says. Thank you, Markets Editor Marlon Bowling.